would you like to go first and pose a question and share something about your experience working with small businesses that are taking advantage of these lending options? Dave, go for it. Just make sure you come off mute, Dave. That's it.
Hi, Dave Watson, Let's Do Business Group. We're a CDFI, not-for-profit social enterprise. We do business support services across the south east and east of England. We're also startup loan providers. We do business loans through the Regional Growth Fund, and we do recovery loans at the small end, under 150. And my question would be, are there any plans for funding of CDFIs?
In terms of the recovery loan scheme, Dave?
In terms of we're small lenders, and obviously we didn't benefit from the cheap support for the bounce back loans, and I just wonder if whatever replaces recovery loans, or if that's extended, is there any plans for supporting CDFIs with any funding?
I mean, this is a conversation. I'm not sure if you spoke to Sean in terms of the conversations that have been ongoing for a number of years, and certainly within CBILS, and the discussions that Theo has had as head of the Responsible Finance Trade Association with BEIS and with HMT and the spending review. Basically, we don't control the purse strings, as we said, and as Theo is now aware of. So there's recently been a spending review take place.
Is there anything that you heard from Richard or Paul that particularly resonated with you that's really, a current issue?
No, I think our experience of working with startup loans has always been very positive, and obviously with the forthcoming procurement, it will be interesting to see, any perhaps enhancements that might come to the scheme. But it's been a tremendous programme as far as I'm concerned. Our organisation, as you probably all know, is a very small organisation, but in its 40 years, we have seen various startup schemes. And I would say, and I'm not saying it just because Richard's on this, that I think is one of the best programmes that there is, because what we like about it is that it used to be a lot around chasing grants. And I think what entrepreneurs often didn't think was, once the grant's gone, there's not the support there. Whereas with the startup loan, there is that commitment from the business owner. They take on that commitment in many cases for the maximum 5 years. Obviously, we've had businesses who have gone on and also applied for a bounce back loan. We don't really get in, we're not involved in that process, but obviously if we're doing some mentoring, we become aware of that. So I think there's been so much available to businesses that it's really been quite tremendous for them, particularly in the last 12 months or so. And we've just recently been doing a piece of work with our growth hub. And through that piece of work, we were doing business support reviews, and we could see from that there are some really good businesses around, and we're quite proud to be part of the Northwest team delivering and supporting those businesses. So to me, it's all good. I know there'll be negative sides, there always are, but it's all good in terms of helping the economy to go forward. So that's really where we are at the moment.
Thank you so much, Aileen. Richard, did you want to say something in response? You just came off mute.
Oh, I was just going to thank you. I mean, the £50 in the post. Thank you very much. No, I think it's nice. It's good to hear. I think you're right. I think there are clearly challenges at the moment with some of the media activity around bounce back loans, but I think startup loans, actually for any scheme, 10 years is actually quite a good run, and have a sort of 3-year extension. And I think whenever we engage with politicians or with media in any way, startup loans has a really good sort of reputation, and it's one of those things that yes, we'll have challenges along the way and there are things that can be improved, but at the core it's a really good, sensible scheme. So I think it's a scheme that works well. Not publicly announced yet, but I know we have spoken to our delivery partners. As Eileen sort of hinted at there's some enhancements to the scheme that are due to be announced in coming weeks, which small, but again, I think move the scheme onwards. And while I can't talk in specific about the procurement activity, I think what it again will do is it will allow us to keep pushing the scheme on, and particularly have a greater impact in some of the social impact areas that we're proud of and pleased with the impact we have through startup loans in from a social perspective. It's not just about getting money out the door, it's about making sure the money's getting to the right people and actually having an impact over and above just funding businesses, and we're proud of that. But there's so much more we can do in that space as well, and I think this next 6 to 12 months will allow us to do that. On bounce back loans, despite sort of the challenges and some of the different views around the scheme, I think I do have to keep reminding my team to take a step back, and what was the purpose of it? It was to get money to businesses quickly, and back in the sort of the really difficult days, the feedback that was coming in through business organisations and others is that small businesses had weeks of cash left. It wasn't months, it was businesses were going to start failing en masse within weeks because simply they weren't trading. And I think the statistic that I lean on quite heavily is when you look at the number of business failures. Fundamentally, there's been less business failures during the pandemic than there were pre-pandemic. Now, clearly, some of that will unravel, and sadly, no doubt we'll see businesses fail as the funds they've taken through bounce back perhaps run out, or business doesn't return, or whatever. So there clearly will be failures coming through, but to fundamentally support small businesses, if that was the key objective, I think it was met. And as I say, I think it's something that there's lots of work to be done, but something that we are really pleased with, that core objective was met. Thank you.
Excellent, thank you. I can see you've got a hand raised. I'm just gonna, before I come to you, Andrew, I'm just gonna read a question in the chat. Have you got your statistics ready, Richard and Paul? So Ali has asked, do we know the latest findings on the number of startups that have been unable to meet the repayments on the startup loan? Where might I find that data?
There's the number of startup failures. So we produce data through our annual accounts on the performance of the scheme. So we don't produce sort of monthly sort of data on the scheme in that way, but we produce it through the annual accounts. I think sort of high level though, we also obviously share it with our delivery partners, but high level, the actual performance of the scheme is actually surprisingly robust at the moment. The key issue during the last 12 months or 18 months is providing the 6-month payment holiday. So we started offering that very early on in the pandemic. But then it was actually insisted upon, so the FCA came out and it became sort of an obligation for all funders. So the really key thing for us is to track and look at that population that were clearly the ones that are likely to be more distressed. And then as they reach the end of that 6-month period, what happens? And the actual underlying performance of that population is better than we expected. Whether that's because they're able to access other funding, such as bounce back loans, to be determined as we get further away from the pandemic, he says, hopefully. But the underlying performance has actually been particularly strong. We're set by government, which is sort of public knowledge, a covenant, effectively. It's not an objective. You don't have an objective to lose money, but essentially 35% over the lifetime of the scheme of failed business, of losses. So we have a loss sort of rate of 35%. Which is high when you consider it and compare it to sort of the market. Sort of clearly an HSBC or NatWest wouldn't be able to operate at that level. But that's the purpose of the scheme. We're there to take that more risk that's acknowledged to be there for startups. but we are well within that. So we are at least sort of, well, beyond 10% in the positive territory. And that's often a sort of a really interesting question for us to consider internally, which is, on the one hand, should you be taking more risk? Should we be pushing the envelope? Should we be doing that for the public money? And it's a sort of a difficult one to sort of get the balance right, but that's the sort of territory we operate in.
Thank you. Yeah, hopefully that answers Ali's question. I really felt personally like a penny dropped when you were talking about the borrower remaining liable for 100% of what they borrow, and the government backed bit is the 70% once everything has been exhausted in terms of recovery. So yeah, thank you for clarifying that earlier on.
And the 70% is different for different schemes. So for bounce back, it's the borrowers, as I'm sure many are aware, is 100% guaranteed by the government, but obviously 70% for RLS.
For RLS, right.
And CBILS and phase one of RLS is 80%. It's just now it's the chance has dropped it down to 70%.
Yeah. Okay. Andrew, you have got your hand raised. Thank you for being patient.
No problem. Morning, everybody. Yeah, I'd echo the previous comments. I mean, we've delivered startup loans for quite some time now. We've been involved in delivering RLS, CBILS before that, EFG, and then SFLG, going back to when the scheme was first designed and its inception. And the fantastic schemes, they really support finance for enterprise to make sure that good quality, viable businesses can gain funding that otherwise, without that kind of scaffold, just wouldn't be able to get funding at all. So from that point of view, I'd endorse the prior comments. My question is for Paul, and you probably get asked this a lot, but at this stage, we want to make sure that funding continues to flow to some of the most deprived areas of the UK, and underserved SMEs can continue to leverage finance. At this stage, have you got a bit of a roadmap for the follow-on scheme, whether there will even be a follow-on scheme to RLS, and at which point key decisions will be made so we can ensure that capital remains flowing?
Is my answer to that one, Andrew? Or how long's a piece of string? We've literally this last week or so we've started the working group between ourselves, HMT and BEIS to look at what goes beyond. But HMT are taking this opportunity to look beyond recovery loan scheme and to look at all the debt guarantee scheme, to look at the whole of the SME lending sector across everything at the moment, and it's right that it does. You know, given what the world and what the UK has gone through in terms of the COVID-19 and the impact it's had on lending and finance, it needs to take a step back and say, okay, where are we at? Where do we need to move forward, and what do we need to put in place that gives us the longevity, or do we need to put anything in place at all? Is also the counter argument from there. So at the moment, it's very, very much in the early stages of information and data gathering, and the way we're going about that is there's lots of different ways. We're talking to trade associations. We're also going to be sending a survey out to all the accredited lenders on the scheme, and it's a comprehensive survey that we're asking lenders to complete. It's not by no means is it a 5 or 10 minute do it on the side of your desk survey. It's, if you really want something, you've got to show us that there is a market gap for it, and that, for all the people who may not be aware on the call, British Business Bank exists to help lenders where there's identifiable market gaps in the market, because as the government's economic development bank, that's what we're there to do. We're there to support businesses to move forward where lenders might not be comfortable to move into the areas because they haven't got the risk appetite, and it's for us to identify those market gaps and fill them, and that's what we're talking about with HMT and BEIS as to how we move forward. So that's the long answer to the short answer of no, we don't know yet. But that will be obviously the Chancellor's decision to make, but it will be an informed decision on the information that is being gathered primarily by Treasury, but with the support of BEIS and BBB as we move forward.
help, Andrew?
Thanks, Paul. It does, yeah. I'm just going to put, we're going to lend loads of money. I'm going to be positive. We're going to get a follow-on guarantee mechanism, and we're going to support lots of SMEs in the new financial year.
Good luck. I've had another question in the chat about a concern that a lot of pre-applicants worry about. So, and this might be a question for one of the loan providers on the call. Paul and Richard, of course, please feel free to respond as well. But if they can't make a success of their business, so they've taken a startup loan and it just doesn't work out for them, are they going to spend the rest of their life making personal repayments? That's what the concern is that seems to be putting some applicants off. Oh, Carol, did you want to, are you answering that question? You're asking the different one?
No.
Okay, Richard.
Ultimately, it is a loan. It is a loan to them as an individual. So there is that personal liability, and all that comes with that. I think they spend the rest of their life. No, and it depends on the sort of the route that they take. I think again, it'd be interesting what the delivery partners' view is on this. We are sort of almost like a house position on it is we sort of reserve the right to take all the actions that any other lender would take, but thus far in the history of startup loans we don't go all the way. So I think we don't publicize that we don't take certain action. We can almost reserve the right to allow us to take all action because each circumstance is different depending on the situation of the individual. But as a sort of ultimately a government lender, we have to kind of try and find the right balance to make sure we collect money appropriately so that it can ultimately be recycled and lent again, but equally not being overly aggressive to the individuals and be conscious of their circumstance. I think we get that balance pretty well, and I go back to that point about almost reserving the right to take all the steps that are out there, but actually we currently don't take them all because it's about sort of hitting the right mark. So I can't give a precise answer to it, but that's the sort of principle that we follow. And as the delivery partners might think differently, might think we don't chase hard enough, and others might think we're too aggressive. But I think the balance is pretty good.
Thank you. Yeah, that's really helpful explanation. Carol.
Yeah, thank you. Apologies, because my system crashed, so this question might have already been asked, and obviously I've missed that. But we've been doing quite a bit of work with Liz Barkley, Small Business Commissioner, and she introduced us to Vikas Shah, who's a non-exec phase director. And what they wanted to know from us and from our members are the main issues that micro businesses are facing. So we're currently collating all that data. What is one of the main areas of issues that micro businesses are facing is the access to funding, and in particular with NEA coming to an end and potentially startup loans sort of picking up that gap. But obviously a lot of the NEA clients are quite disadvantaged and potentially could have a poor credit history. I know, Richard, you've mentioned about the pre-loan and the post-loan support, that the bids that are happening or will be happening at the end of this month. But I think we touched previously on the fact that there might be something coming out for those disadvantaged groups. Are you able to give a little more information on that?
So if I sort of understand correctly the sort of question, so I think that's what this leads to is this is actually the procurement activity. So we've kicked off the procurement for the national delivery partner and the regional delivery partner, to be rebranded for those involved, business support partner. But let's not go there. And I can't talk too much about that because it's under the procurement rules. However, we haven't actually kicked off yet the procurement for the specialists. So in a perverse way, I can talk more about that because it's not actually a procurement activity yet. I think that's the area that we're particularly talking around, because at the moment, the scheme at the moment, for all the positives that people have said about it, it is slightly constricted by being sort of one size fits all. So all delivery partners are effectively offered the same sort of commercial relationship. The customer journey is effectively the same for all, and that's great, because that obviously makes it simple. But what it doesn't do, it doesn't allow that little bit of bespoking around the edges and that little bit of flexibility in perhaps customer journey or in potentially the rules that are applied. So the new model, the new approach is essentially to have that slightly different commercial relationship with national, regional, and then specialist delivery partners. And for the specialist delivery partners, what that allows us to do is to bespoke a little bit more that customer journey, or bespoke a little bit more the commercial relationship, and give us a little bit more flexibility. So we do have specialists, as I said before. You've got sort of ex-forces and create Fashion Angel, for example, supporting a sector, and so on and so forth. But those organisations are doing it almost despite the setup rather than because of. And I think what we're able to do is start to pilot and test different commercial models and different customer journeys. So an example we're currently piloting already is a sort of a 12-month contract, where in this scenario it's less about the commercial model, but it's about the fact that it's an organisation that has a very good connection into their business sort of network that they operate with. In this case, it's the creative sector, so less about sort of social impact or access, but it's a good model for other areas. And they have a very good ability to do that free loan support. What they don't have is sort of credit underwriting experience. They don't have that kind of conversion into the more formal bit, so what we call our delegated approval authorities. So the more formal bit as it starts to become an actual credit application. What they then have is they're very good at post-loan support, the mentoring bit. So what we're exploring with them is actually, can we have a slightly different customer journey where we make best use of what they're good at, and then the bit that they're going to struggle with that stops them being a delivery partner in the sort of normal way, can we come up with another solution? And so that's the sort of the approach we're going to be taking over the coming months with our specialists. And I think when it comes to so I had a meeting yesterday with an organisation that's heavily involved with refugees, for example, and was talking about the challenges that in there around accessing finance and startup loans. And so the option is, though, is if we do it intelligently, and we're not talking about changing the scheme completely, but just shaving some of the edges or looking for where there might be little points of friction. Can we do it differently? So it might be a slightly different approach to credit. It might be a slightly different approach to visa regulations or right to remain rules. And by working with these organisations, doing a pilot with them and then demonstrating, yes, it's workable, you can then bring them on board for a longer term relationship.
Fantastic. That's really exciting. NEN is really proud of all of our members that work with some of those hard to reach groups, refugees, for example. So to hear that there are going to be more bespoke options coming down the pipeline is really positive, really encouraging. Thank you. So just before we wrap up, has anybody got any last questions? Yes, Aileen.
Just really making a comment on Richard's point and working in an area where there's a lot of disadvantaged people. One thing I believe is that what is really important in the process is that we have the right business advisors, the right business support. We often find that people come along and they're not ready to progress through through a startup loan. And I think it's that area of support where they can be given that help and in many cases see if they can get help to get into employment and perhaps improve their own credit history and so on. So I think there's a lot of work there that can be done as well. And I think that's where the support is really important, that we have people who can support and empathise with their situation.
Yeah, I couldn't agree more. And actually, that was sort of part of the conversation I had with the reference. So this particular organisation I was talking to, they are already an affiliate partner for us. So we have for those that aren't involved, we have a lot of organisations that we call affiliates that effectively feed into the startup loan sort of network, and they are an affiliate partner. But we were sort of talking about either them partnering with an existing delivery partner or this sort of specialist delivery partner route, kind of for exactly that reason, that if at the moment they feed in, and I'm sure all our delivery partners do the very best job they can, but if it's the first time or it's not very often that someone sees a refugee, that the process is just going to be more difficult, and they're going to ask more questions. It's not going to be as efficient, and they won't necessarily have, you know, all the understanding. Whereas if it's obviously done more regularly, you just get that knowledge, that understanding, and it's not even that. Some of it's not even about changing the process. It's just having an understanding which makes it easier and smoother, and might mean that you get to a yes more quickly, or frankly sometimes getting to a no more quickly, which is just as important. So I think you're absolutely right. Is that the business advisors are that key element in the scheme.
Absolutely. There's lots of nodding going on. Thank you so much, Richard and Paul, for your time. We really appreciate you coming to talk to us and answer these questions.